Hello everybody, welcome back to our channel. Today is February 21st, 2021. To start, let's talk about gold. The performance of gold this year is so far disappointing. On last Friday, the spot price just dropped to a new 7-month low, but managed to close the day off the lows. The gold spot price is down more than 6% this year, and it's underperforming silver, platinum, and palladium. In fact, not only Bitcoin, but silver and platinum are taking a lot of attention and investments away from gold. It's important to notice that silver, platinum, and also palladium have higher industrial demand than gold, and these metals will have an advantage in comparison to gold during the expected economic recovery. Last week alone, gold lost $45 per ounce, and since the all-time high in August, gold has lost $283 per ounce. The million-dollar question is, how much gold can drop before it starts going up again? The yellow metal is under a lot of pressure with negative news and low forecasts. Here are some of them. There is an increase on the 10-year treasury yield that directly competes with gold as safe haven asset. Recently, BlackRock sold $407 million worth of gold. In separate news, the investment bank Morgan Stanley forecasts gold price to be below 1,800 at the end of this year. Another factor that could affect the appreciation in gold prices is the strength of the American dollar. The dollar is trying to regain lost ground. However, a strength on the dollar could be short-lived as more stimulus are on its way. If we go to the charts, we can see a double bottom forming here. The key support level in gold price to watch next week is $1,750. Breaking below this support level could trigger a further sell-off and gold prices going lower. Nevertheless, on last Friday, gold hit a fresh low but bounced back before closing the day, and it can be seen as a bullish sign. To go higher, we must see gold breaking above $1,800 level. To conclude, the levels to watch next week are 1,700 on the downside and 1,800 on the upside. Gold still under a lot of pressure on short term, but the fundamentals are still very strong on long term. Gold is a defensive asset, and with stock market booming, people are willing to take more risk for higher gains. In other words, moving from safe investments like gold to more risky investments such as cannabis stock or even cryptocurrencies. The key event to watch next week that could affect gold prices on the upside or on the downside will be the Federal Reserve Chairman Jerome Powell testimony. Markets will be looking for another confirmation that the Fed will be ignoring rising inflation and keeping the rates near zero. Now, if inflation is not picking up, one option for the Fed is to have lower the interest ratings, which will also going to be bullish for gold. The Federal Reserve already said that they are not thinking to raising interest rates. However, the markets believe that if the inflation is rising, the Federal Reserve will have to raise rates to fight the inflation. Rising rates will put more pressure on gold. This is not financial advice, and I express here my opinion. In my mind, we are in a phase of gold and silver accumulation. If you have metals, it's not the time to sell at these prices. However, if you don't have positions in metals yet, these pullbacks represent a good opportunity to buy it. Even though if gold breaks below 1,700, it could trigger a further downside, as I mentioned before. In regards of silver, the ongoing campaign Silver Squeeze has triggered a surge in demand for physical silver to a point that SLV quietly changed prospectus on February 3rd, conceding that there might not be enough bars available in London or elsewhere to add to the trust. Let me repeat this. SLV said There may not be enough silver bars in London or elsewhere to add to the trust. What they are saying is there's no silver available to buy, not even for such a big investor as BlackRock that manages the SLV ETF. Here's what SLV stated. Let me read for you. As of the date of this prospectus, an online campaign intends to harm hedge funds and large banks. Guys, let's make a pause here. Intends to harm hedge funds and large banks. Poor large banks. Guys, we should not buy silver and protect these defenseless big banks that been manipulating the price of silver and stealing from us for generations. So let's continue reading. The online campaign intends to harm hedge funds and large banks. It's encouraging retail investors to purchase silver and shares of silver ETPs to intentionally increase the prices. This activity may result in temporarily high prices of silver. Well, guys, this is hilarious. SLV is putting in their prospectus that they want to protect the hedge funds and the large banks from small investors like us. This is unbelievable. I think any investor that buys any asset only buy it expecting the price to increase. But SLV says that investors are purchasing shares of SLV to intentionally increase the price of silver. So SLV is clearly saying that they are trying to prevent the price of silver from rising. This declaration is very strange, and we can see from reactions like this that the end of the silver price manipulation might be approaching or becoming unsustainable. You can find the link for this article on the video description. On Separate News, there was a report of shortage of 1,000 ounces silver bars, and the ones available are coming with the increasing premium. To summarize, there is hardly any physical silver available to buy, not even 1,000 ounces bars. The premiums are very high, but the price of silver does not break above $30. Guys, there is something strange cooking under the surface of the silver markets, and once it comes to the surface, there will be hell breaking loose. For now, keep doing what you're doing. Get out of the ETFs, accumulate physical silver, and wait for all this to be over. This will complete the video for today. Thanks for watching. Protect your wealth, stay safe, and take care.